So in a nutshell, it is easy to enter but difficult to scale. And this defines the industry characteristics. So there are no barriers to entry. It's a crowded industry. So at present, as per some estimates, there are about 7,000 staffing companies in India. Now, if you look at this number of 7,000 and link it to the 60 lakh staffing employees, and the it's the per head number comes very low. Good evening, everyone. Today's topic is workforce on demand. So we are going to discuss about the staffing industry, and staffing industry at present has become omnipresent in today's economy. So we would be utilizing their services, or we would be experiencing it on almost on a daily basis without even realizing it. For example, when you go to a DMart, there are people filling up the shelves. There are people manning the counters. If you order something from Amazon, there would be people involved in the entire supply chain, providing, doing the sorting, packaging, delivery, etc. If you go to a mall or a airport, there are people involved in maintaining that place, doing the cleanliness, everything. You would also encounter some people selling credit cards and all at such places and all. So, and then if you see some infrastructure and construction activities, or all the workers that are engaged there, it is very likely that these workers would not be employed by the companies who are by these companies themselves, but would rather be on the roles of a staffing company. So that is the industry that we are going to discuss. Now, before we get into the presentation itself, I would like to clarify on a certain terms that will be used during the context, during the presentation, and so that everyone is on the same page. One is permanent staffing. So when a employee is on the roles of the company for which he or she is working, then it is called permanent staffing. Permanent recruitment is when a staffing company or a recruitment firm typically does hire a employee and uh, place it on the company's role. That is permanent recruitment. Temporary staffing or contractual staffing or flexi staffing, um, all of them would mean that the employee is working on some for some company, but he is on the role of some other company, which is the staffing firm in this case. And then third one is gig workers. When gig workers are typically the people who are employed on a contractual basis for short-term engagements and may not form an actual employee of the company. So like all the quick commerce companies, the delivery agents that we see, or food delivery apps, or even ride share platforms and all, the drivers over there, they may not be the employees of those particular companies. So getting to the going to the presentation, it's now. So why staffing? Why is it needed? One, from a global perspective, one, it supports business agility. It enables companies to scale up and down quickly while also reducing the HR and compliance burden on them. And secondly, from an employment generation point of view, from and especially in a country like India with a lot of youth entering first time jobs, this is a very good place to start. It enables formalization of employment and brings people under APFO, ESIC, and NET. And fourth one is it also helps bridge the skill gap. So as per the Skill India survey done by government along with some agencies, about only 51% of Indian youth who are in the final year of their graduation are employable. So employability is a very big concern in India, and that is where the staffing firms come in, helping train these people and do the deployment and everything. Let's talk about what is the opportunity for staffing in India. uh, Demographic dividend, we are the world's second largest workforce. We are the most populous country and the and amongst the youngest country in the world, and so this uh, workforce is going to grow uh, from an economic growth, and urbanization gives rise to more requirement for semi-skilled and skilled labor. Like 20 years back, most of us would be shopping from mom and pop stores for all our requirements. Those stores would not have employees, or even if they had them, and they were not like formal employees, you know. So it also helps from shift jobs from informal to formal. Now, from a staffing industry perspective, the global penetration of staffing is around 3% of the total workforce, while in India it's around 1% also. So that's quite low, and there's an opportunity to increase that. And then all the emerging work models that are coming up post the pandemic, hybrid work, remote work, flexi, and all. So the staffing companies would be able to cater to such demands better than uh, traditional companies themselves. Let's look at a few numbers to understand this demographic dividend and the shift to formal employment better. So, if we look at India's working age population, at present it's around 90 crores, and it is expected to go up to 128 crores in by FY30. So working age population is defined as people in the age bracket of 15 years to 70 years. Within this, the participation rate, workforce participation at present is around 55%. So that's about 50 crore people in the workforce. That is expected to go up to 78.5 by then the regular wage workforce within this. So when we look at the participating workforce, this includes people involved in agri and related activities as well, which constitutes around 55% of the total. So that leaves out around 20-25 crores of people at present who are either self-employed or employed in employed by someone else. So of this, the people earning a regular monthly salary are about 11 crores, and of this, the formally employed people who are contributing to EPFO on a regular basis is 77 crore, 7.7 crores, and this number, it is expected that by FY30 this should expand to 25.7 crores. The forward estimates are what were given by Quess in one of their presentations back in 2022. uh, Flexi staffing within this is just 60 lakhs at present, or 6 million, and that is expected to go up almost more than three times to 2 crores by the end of this decade. Now, employment uh, is a very important point for any government, and even Indian government has also come out with various policies to support employment as well as employability both. So on the formal employment generation side, there are tax benefits under Section 80JJA, which are given to all the companies employing new employees, uh, and with a salary bracket of less than 25,000. And then there are employment linked incentive schemes. The outlay for this scheme was announced last year in FY24-25 budget, and then it was launched from 1st August this year. This was also announced by our Prime Minister in his 15th August speech. So it has an outlay of 1 lakh, close to 1 lakh crores, and aims to bring around 3.5 crore people under the EPFO net. Now, when we look at the 7.7 crore people who are already contributing versus 3.5 crore additional people over the next 2 years, this is quite significant, and the staffing companies will have an important role to play in this. Then there are implementation of new labor codes, which are expected to happen over the next couple of years. From a employability perspective, there are various apprenticeship schemes which are drawn from the Apprenticeship Act that's there. And some of the staffing companies like TeamLease and all have been able to benefit from the schemes as well. Uh, so now what we have discussed so far is that there's a clear necessity for for staffing companies. There is macro tailwinds, and there's government support available as well. So then, does this make a compelling case for investment? That is what we'll look at in the next few slides. So if we were to broadly look at what constitutes staffing, then at the very base level, we have staff augmentation or contractual staffing, which is basically providing headcounts to your clients, and your revenues are directly linked to the headcount that you are providing. Uh, the largest companies in this are Quess and TeamLease. Uh, this staff augmentation can be broken down into general staffing, which includes the entire gamut of your blue collar, gray collar, white collar workers across all industries, except for IT professionals, which are classified under professional staffing. And the reason for we will discuss the reason for this segregation later as well. When we move from this to, if the company, instead of providing just the headcount, if it also takes up some KPIs, and then their revenues get linked to those KPIs instead of the headcounts, then it comes under the ambit of managed services. So facilities management or asset management, as it is called, industrial catering, security services, business services, and the latest kid on the block is GCC as a service. So all of this come under the managed services ambit, and there are companies like SIS, UDS, Blue Spring, Crystal, etc., which have done, which are present in this segment. The third one is other HR services now, which includes search, RPO, payroll, compliances, and all. Here, the companies are not concerned with providing headcount, but rather providing service to the service or software uh, to manage those headcounts, or and the primary companies in this are Darwin Box, Naukri, etc. Also, all the companies who are doing general staffing or contractual staffing for that matter would have some amount of HR services to manage their operations efficiently. So as we go from left to right on the screen, the as the value add increases, the margins also keep on increasing. Uh, Now, let's look at what does it take to set up a staffing company. So you would need all the basic a company registration with PAN and GST, all the regulatory compliances and all. But pretty much that is it. Beyond that, you don't need any specific technical skills. There's no technology backbone required. There's no minimal capital requirement, and as such, even unbranded companies and fairly new companies can take up this business without any ado. So it's fairly easy to enter this business. But when it comes to scaling up this business, then it is a completely different ball game. Now you uh, if a company wants to be present in multiple locations, then they will have to comply with all the local regulations at each state and district level, and some of these compliances also go down to taluka levels as well. So they would have to either expand their core manpower to be compliant, or they'll have to rely on technology. If they are going to rely on technology, then they'll also have to do continuous investments in technology. Also, for productivity, employee lifecycle management, technology becomes a must there. So, thirdly, they would have to build recruitment capabilities, because to enter high-end businesses or to enter some of the industry verticals, it is necessary to have recruitment capabilities. Finally, to attract uh, talent, they would have to invest in branding, and then uh, there would have to be a strong balance sheet to support this investments, as well as the working capital need that would arise. So in a nutshell, it is easy to enter but difficult to scale, and this defines the industry characteristics. So there are no barriers to entry. It's a crowded industry. So at present, as per some estimates, there are about 7,000 staffing companies in India. Now, if you look at this number of 7,000 and link it to the 60 lakh staffing employees, and the it's the per head number comes very low. And also of that, if you look at the top two companies which are there, which have 7.5 lakh employees, and then consider the rest of the companies and the headcount that they would have, it's very small. So the offerings are commoditized. There's nothing unique that any staffing company can bring to the table, and so the pricing power is also negligible. uh, and this we will also see in the coming slides. So it's extremely difficult to scale, as we discussed, and companies which have scaled up will then start having some advantages in they may not be clearly visible in the financials, but some intangible benefits like visibility in order to gain market share, or their ability to be a listed company, and all that those things increase. So TeamLease and Quest from that aspect do have something which is worth looking at. So now we'll look at general staffing as well as later on professional staffing from the vantage point of this two largest companies in India, Quest and TeamLease, and I try to understand what are the dynamics of this industry. So firstly, on the first metric in general staffing is headcount. So if you look at the industry itself, the headcount growth has been 15% over the last 10 years and 9% over the last 7 years, respectively. If you look at Quest Corp and TeamLease, the growth has been close to 13% and 10% over the last 5 years. TeamLease headcount also includes the degree associates, the digit associates and apprentice headcounts that they have. So at this point, a headcount, when we say it is someone who is employed on the uh, staffing company's book but is working for the client. So it can also be the headcount can also be called an associate, and then there are core employees who are separate from the associate, who belong to the staffing company and are working for the staffing company itself. So in terms of revenue growth, if you look at over the last 5 years as compared to what the volume growth was or the headcount growth was, the revenue growth was significantly higher, about at 18% and 17%. This is like a 5 to 7% kind of pricing growth that the industry seems to have seen. But then, is that really the case? That will explore. So, what constitutes the top line of a staffing company? First, on the volume addition side, if you look at, there are two modes by which the companies add headcount. First is transfers, where the client themselves hire employees and place them on the staffing company's payroll. Now, the staffing company is responsible for doing the payroll, attendance, compliance, and everything, and they receive a small markup to the salary, which is generally fixed in nature, and then some ancillary revenues. The other one is sourcing and deploying, where the staffing company is also responsible for recruitments. So transfers are a very common thing in FMCG and retail sector, while if a company is looking at staffing company is looking at manufacturing, then they would have to have sourcing also. So when we look at the revenue breakup, the largest part of the revenue is associate salary. On top of that, the salary markup that we discussed. So around 80% of the salary markup is fixed, and then there is if there is hiring, then either there is a hiring freeze that the company gives, the client gives, or if it doesn't give a hiring freeze, then the markups are increased accordingly. And then ancillary revenue typically consists of there can be insurance, there can be small KPIs that the companies take, like in the form of maintaining dress codes, or if it is in the manufacturing sector, they can take up mobility as one of the KPI, where laborers are moving from one state to another, and the company provides housing and all the ancillary facilities for them, and that adds to their revenue. So that considers the total revenue of any staffing company, of which the uh, part which is most relevant to us is the salary markups plus hiring fees plus ancillary revenue, which is the net revenue uh, per associate per month. And this PAPM is what needs to be tracked in this industry. Now, whatever salary hikes that we have seen, uh, or rather, whatever revenue pricing growth that we have seen, has primarily come from associate salary hikes. And when we look at the net revenue PAPM uh, per associate per month, that has not really moved over the last many years. This data is for TeamLease. When we look at Quess, Quess has also been stating that their PAPM has been between 680 and 700 over the last 3-4 years. However, in Q1 call, they said that their PAPM is in the range of 600 to 650. So TeamLease has been clearly seeing pressure on their net revenues per associate per month over the last 4 years. Same has been the case with Quest as well, and this goes back to the point where uh, this sector doesn't have any pricing power. So the if the clients come up with more volumes, then they will ask for pricing discounts, and that is what is being reflected. Now, this what this also effectively means is that your revenue growth may not be relevant, and then since PAPM is going down, that means the net revenue growth is lower than the headcount growth that we saw. uh, Now, going to the next metric, which is important for this, is uh, the largest cost in their for a staffing company is its own employees. So uh, the more number of associate employees that a staffing company is able to manage per core employee, the more efficient it would be, and the higher its profitability would be. So uh, if you look at over the years, TeamLease has been able to increase its associate to core employees ratio from around 200 to 350. But then post that, for the last 4-5 years, again this has plateaued. West at some point used to do 330 associates per core employees, that had increased, uh, and but now that has also gone down. So this associate to core ratio would differ based on the industry that the companies are present in, and services industries tend to have higher associate to core ratio, while manufacturing uh, industries tend to have lower. But in effect, since this productivity improvement is plateauing, this also then affects the margins that they are earning. So when we look at the general staffing margins for these companies, uh, for TeamLease, the data was available since for the last 8-9 years, while since Quest has gone through this demerger process, so historical data is not available. But the EBITDA margins are declining on a continuous basis, and the management has been saying that this is on account of the big associate employee salaries increasing, which we have also seen. But at the same time, the EBITDA per associate per month, EBITDA PAPM, has also been declining over the last 2 years. It had been stable for quite some time in the 350 rupees per month range. So now it has gone down to 283. So it's not just associate salary increase, but also pricing pressure once again. So then, despite this increasing EBITDA, decreasing EBITDA, and increasing pressure and cost and everything, why is this industry so good? So one is, it has very low capital intensity. When there are there's no capex involved in this business. And even on the working capital side, there are two models on which most of these companies work. One is the collect and pay model, where the staffing companies would collect the salaries of the associate by 30th of the month and would process the salaries a couple of days or a few days later. So it's effectively negative working capital model for them. And the other one is pay and collect, where there are receivable days involved in to the tune of 30 to 60 days. So if we look at the collect and pay mm, headcount for Quest, that has increased from 65 to 79% at present. For TeamLease, this has been always in the range of 86 odd percent. So it's only for 20% odd revenue that you are spending some working capital in, and that too is in the range of 30 to 60 days. So your net working capital can on the total revenue can come down to 12 days or even lower under normal circumstances. So if you look at then the incremental ROICs that this companies generate, the average associate salaries tend to be around 25,000 per month or lower. So the revenue per associate per month is around um, per annum is around 3 lakh rupees. The EBITDA, I've taken the same EBITDA PAPM that TeamLease did last year at 283 rupees. So that gives you a 3,400 per associate per annum of EBITDA. There are no depreciation because there is no capex required for this business. There's negligible capex required, and since there are tax benefits that the companies enjoy under Section 80JJ, there's no tax implication as well. So the no pat then comes to a similar range, and if we consider 12 days of working capital, then the incremental ROIC is come to around 34%. Obviously, there would be some corporate overheads and all, because of which the incremental ROIC at the company level would might come down slightly, but it it is still very high for anyone to enter and consider growing this business. Now, just to summarize whatever we have discussed so far, pricing pressure has is leading to reduced net revenue PAPM. Productivity improvement seems to be plateauing. EBITDA PAPM is going down as a result of those two. There's negligible tax, but still the ROICs continue to be higher. And what the companies are also doing in this to in order to expand their PAPM and profitability is going for foreign uh, expansion, like going to Middle East and Singapore and a few other countries and expanding there. That can be a move to look out for and can significantly add to profitability. Now, jumping to the professional staffing piece. So one is, how is professional staffing different versus general staffing? So it caters specifically to the to IT employees requirement at ITAS companies, the GCCs as well as non-IT companies. There's a rate card model. Now, this needs some. How is it different in the revenue model for general staffing? We saw that there is the associate salary plus markup is what this companies receive. Now, in professional staffing, what happens is whenever there is a requirement uh, for some employee, the large IT companies and all will typically bring out typically approach a lot of staffing companies, not just one, with their requirements uh, in terms of what skill set they require and what experience they require, and also what are they ready to pay for that role. So all of these staffing companies will typically go into the market, and whosoever is able to hire fast will bring in a candidate once it is approved by the company. The IT company will pay whatever rate card it had decided on, irrespective of what salaries the staffing company is paying to the employees. And so whatever is the difference between the two becomes their margin. So um, basis this model, 100% of the staffing has to be done by the 100% of the sourcing has to be done by the staffing firm, uh, since the demand for niche skills and specific talents like AI skills and all those are increasing. The companies also need to have experienced recruiters in order to judge those candidates and bring them in faster. uh, and typically it tends to be a high margin business basis, the model already discussed. Now, and the high gross margins are upwards of 50% usually, and they are also because there's working capital intensity here. So at the time of billing, what happens is by the after the end of every month, the staffing company would submit the number of days or number of hours that this resource has worked. And if there are KPIs, then they would also submit a report on those KPIs. It would be judged by the project manager and the HR, and once that is approved, then the invoicing happens. And after the invoicing happens, typically 30 to 45 days, based on what is discussed, the company would be paying after that. So the entire period takes around 60 to 90 days. And uh, to build bake in this working capital, also the gross margins tend to be higher. Again, the tax benefits under Section 80JJ are available only up to salaries of 25,000. And in IT, the salaries of this associate employees tend to be much higher. So there are no benefits here. So if you look at how this industry has grown over the last 3 years, both Quess Corp and TeamLease have grown at 3.1 and 3.7% CAGR. If you look at TeamLease data for the last 5 years, it has still grown at around 7.6% CAGR only. So this is significantly lower as compared to what we saw in general staffing in terms of revenue. And primary reason for that is after the COVID, there was a big boost in terms of what IT growth rates. So I plotted the growth rate for the top four companies in IT. So if you can see that in FY21, later part of FY21 as well as in FY22, their growth rates year on year in USD terms were in high double digits, high teens, and upwards of 25 and 20% also in some cases. But post FY23, some part of FY23, they have started coming down and now are below 5% for the last few quarters. So the industry has been slowing. Secondly, whenever there's such an incident where there's revenue growth is coming down, the IT companies, in order to maintain their margins, start cutting down on their own expenses. And the lowest hanging fruit in terms of their expenses is subcontracting expense. So all the IT companies have then been cutting down on the subcontracting cost as well, as you can see here in the second chart. Now, what is subcontracting expense for this companies is basically revenue for the staffing firms. Uh, so the IT business has been contracting for them, and the staffing firms have been indicating that in FY23 they saw about 60% decrease in the number of open positions. FY24, some companies saw up to 50% of that total associate headcount going down. And FY25 and the first half of FY26, it, it continues to be very tepid for them in terms of headcount addition and all. So despite this, there was a low single digit growth that we saw, and that primarily came from GCCs. So the global capability centers. Post pandemic, post 2020, there was an expansion in terms of the number of GCCs that are being set up in India, and also their headcount growth over there. So if you look at the data here is for Quess, their total revenue contribution, which comes from GCC at present, is around 70%. For TeamLease, around 64% of the revenue, professional staffing revenue comes from GCCs. And uh, this number, it is fair to assume, was very negligible 5 years back. So it has entirely come up in the last 2 3 years. If you look at the total headcount, the new headcount addition that is happening at Quest, again, more than 70% of that, close to 75% for the last financial year, has been in the GCC's part only. So whatever headcount decrease that they saw in IT, that has been replaced with GCCs, and this is being talked as the next big growth opportunity for professional staffing. The reason for that is there are about 1800 GCCs in India at present, and this number is growing. The acceptability of flexi staffing in GCCs is higher. The penetration is around 8.2% versus 5.5% for traditional IT staffing. The GCCs also tend to have higher associate salaries and better margins, so it makes sense for staffing companies to target them better. And then there are additional services that the staffing companies can provide to this GCCs, so they can extend their services to permanent recruitment, where the GCC wants some employees on their own role, but the staffing companies with their pool of recruiters and all can help source them. Next step can be where a GCC, instead of having its own recruitment team, can um, outsource the entire recruitment process itself to some uh, staffing company which does an RPO. uh, they can help set up a GCC, so they can tie up with real estate players, they can tie up with all the other ancillary service providers to provide this entire setup service. And the final thing is a plug and play model, where start offering GCCs as a service. And both TeamLease as well as Quest have talked about this actively in their calls, but then they are not the only ones. Even IT companies like HCL Tech and all have also been talking about GCC as an opportunity. So GCC as a service is a big opportunity. Now it remains to be seen who would ultimately win this race. But in any case, there is significant opportunity for all the players here. So to give a number, at present, of the 1800 GCCs in India, Quest has only 150 of them as their clients. 157 precisely are in Q1, and TeamLease has around 75 of them as their clients. So there's significant penetration opportunity as well for them. So going back to professional staffing, how the EBITDA margins have performed. Obviously, you would see much better EBITDA margin, given that the gross margins are upwards of 15%. So in the uh, last 7-8 years, TeamLease has had EBITDA margins in the range of 6.5 to close to 10%. And Quest has clear data is available only for the last 2 years, and they've been doing good margins. Even at the PAPM level, TeamLease does around 5,000 rupees uh, per employee per month, uh, while Quest does around 9,700 rupees. So this is significantly higher than what we saw in general staffing, where it was 283 rupees and 360 odd rupees per associate per month. So, but when we look at the ROIC calculation for this year, the associate salaries are higher at around 10 lakh rupees. EBITDA margin, if you consider 7% EBITDA margin, which is close to what uh, uh, TeamLease has been doing in the last few quarters, then uh, that is 70,000 rupees of EBITDA per associate per annum. Again, there's no incremental depreciation. There would be some corporate level depreciation on and all applicable, um, but there's tax applicable at the full tax rate of 25%. That amounts to around 17,500. The no pad is 52,500, and there would be around 90 days of I've considered the working capital at the maximum limit of 90 days. So the ROIC still comes to a decent 21% in this case, uh, considering corporate overheads and maybe lower working capital intensity than this. it would still be in high teens. This is all on incremental basis again. So to summarize, uh, here bench strength of recruiters is a key, because whenever the IT company comes up with a requirement, it is a competitive market where everyone can participate, and so people who can source and deploy faster are the ones who will win. Uh, GCCs have been the growth drivers in the past 3 years. If IT demand revives, then that would be an additional boost uh, to the overall business. It is still a high margin business, but lower as compared to general staffing. So now we'll look at how Quest and TeamLease do head to head in that general staffing and IT staffing. So if we start with general staffing, Quest, the key sectors that they cater to are 23% comes from retail, BFSI another 22%. This is in terms of headcount and not revenue. And then manufacturing contributes around 17% headcount. This manufacturing is growing at a much faster pace for Quest. For TeamLease, BFSI is their largest vertical, followed by consumer and retail at 20%, and then manufacturing. Uh, they also have manufacturing presence through a lot of this degree apprenticeship that they do. In terms of total headcount, we saw this earlier, but around 4.5 lakhs is the headcount for Quest, 2.92 lakhs for TeamLease, and then TeamLease also has another 47,000 under the apprenticeship program. Uh, in terms of, if you look at the revenue contribution and the EBITDA contribution, significant amount of revenue comes from this for both the companies, 87% and 93%, but at the EBITDA level it's just 59 and 68%, indicating its relative importance in terms of revenue is there, but the EBITDA drivers are something else. The margins we already saw at 1.5% and 1.1%, and the funding profile also we discussed. So TeamLease has a better funding profile as compared to Quest at present. Look at professional staffing. GCCs contribute 73% of the total revenue for Quest, whereas for TeamLease it is 64%. The headcount for both the companies are similar at present, and at some point of time, Quest Corp was close to 9,000 in terms of total headcount, but then over the last few years, as they concentrated on value and uh, with all the restructuring that has happened, their headcount had gone down. Uh, but when it comes to PAPM, Quest seems to be doing much better. So maybe they are doing a different kind of doing different kind of more specialized staffing in that particular segment rather than the uh, low end skills. So in terms of revenue contribution, this remains at 6% and 5.3% respectively, but EBITDA contribution is significantly higher at 23-27%. And TeamLease has just started with with IT staffing in outside of India. They've done one acquisition in that. Westcorp, whatever numbers we discussed are for the IT staffing that they are doing in India. They also have presence in Singapore um, and Middle East, where they do some bit of IT staffing, and that outside India contributes around 19% to their overall EBITDA for Quest. Now, coming to how this industry has performed globally, I've included TeamLease, Quest, and SIS and UDS, which are Indian players. And then a host of other companies like Adeco is the largest largest staffing company in the world. Randstein and Manpower are close by. And then there are some companies like Kelly, which specifically focus on more blue collar and gray collar work. Uh, there are companies like Robert Half Recruit, which do a different kind of business altogether. They are into very high-end specialized staffing. So if one thing that we can notice from this is over the last 3 years, uh, India is the only market which has seen growth. If we look at longer term data in this as well, if for 5 years or more than that, it still come out that India is the only growth market with all the companies outside India at best growing at very low single digit. And because there is no growth, there's also operating deleverage that some of these companies are seeing, and they've done some acquisitions and all of those, because of which their EBITDA has been suffering even worse. So if you look at the EBITDA margin over the years, then Indian companies have seen some EBITDA compression that we have already seen, but even foreign companies are seeing EBITDA compression for most part. And then, but a couple of observations here. One is companies which are doing similar work as what TeamLease and Quess are doing in India tend to have margins between 2 to 4% outside of in the global markets, while TeamLease and Quess are sub 2% here. Secondly, companies who are in the specialized staffing business or only doing recruitment process outsourcing and all tend to have margins which are upwards of 10%. Like Robert Half Recruit and Conferry. Robert Half and Recruit does RPO as well as specialized staffing both, while Conferry focuses only on RPO. RPO stands for recruitment process outsourcing. If you look at ROEs for Indian companies, it has been in low teens. Global companies also they've been doing single digits or low teens on compressed profitability at present. And one of the reasons for ROEs, and again we will see the similar trend in ROCs as well, is all these companies, though there is no significant capital requirement, they've gone for a lot of acquisitions, either to enter new markets or to enter new business segments, or to get some HR technology company to improve efficiencies and all. And for most parts, those have not generated the kind of returns that one would expect. So, despite higher incremental ROIC calculation that we saw for their core businesses, these companies are still, if you look at the ROCs, they are doing in low to mid teens. But going forward, if the capital allocation improves, which is being indicated at least for some of these companies, that they won't be doing much acquisitions and all, then there's a clear case for ROIC improvement. Looking at what valuations these companies are trading at present, uh, Indian companies are all on a EV to EBITDA basis. Indian companies are trading between 9 times and 19 times. The foreign companies are also trading at similar valuation despite no growth. Growth in India is not being attributed any value. You can see. Similarly, for PE ratio, the number of companies here are lesser because some of the loss-making companies have been removed. P ratio again for Indian companies as well as global companies is in the same band, and it is not that all historically these companies have not been valued at zero growth opportunity. So in the past, if you look at uh, Quest and TeamLease, and I've taken EV by EBITDA here because at some point of time, these companies were either generating very low profit or were loss making in some quarters because of some one-offs, and it was tweaking the entire graph. But if you look at historically, they had been getting some value for the kind of growth that they had been showing, but since that has not translated into better return on capital, or margins have been compressing, this valuations have also come down over the period. So to conclude, And coming back to the question of whether it is uh, whether the sector become is a good investment or not, uh, the positives are that there's very high long-term growth potential, and we saw that in the initial sites. The incremental ROICs can be very high. The valuations have turned reasonable, and then near term there can be a trigger in terms of whenever IT sector demand revives. Uh, the negatives, anything that happens in the economy will have a direct impact on this business. This are the first one. Flexi staffing is the first one to get impacted because that is the most easiest to in terms of reducing cost. Regulatory changes can impact their business. So regulatory changes even in the client industry, like for example BFSI, there was some changes that the RBI had indicated in terms of insourcing of KYCs and all, and because of that, this companies lost significant accounts to the tune of 5 to 10,000 for both Quess and TeamLease in a matter of a couple of quarters only. So these things can happen in future as well. Again, no pricing pressure, no pricing power is leading to compressed profitability, and this can continue in future again. And then in the past, both these companies like Quest and TeamLease have done a lot of acquisitions. uh, Quest has done far more larger acquisitions. TeamLease has done those small acquisitions in HR services and all, but none of them have really like generated a lot of value. uh, in this acquisition, either they continue to remain very small or some of them have been divested. uh, So again, if such adverse capital allocation happens in future, then that is a risk to the overall company level ROICs. Uh, yeah, so that's for the investors to gauge. No, I think that's it. Thank you. If there are questions, I'll take those.
So, Nirmal, thanks for the presentation. It was a fairly comprehensive presentation. I just had a question, and if I've understood it right, staffing companies seem to be highly dependent on IT services, etc. What we are seeing and witnessing is that the requirements of the IT companies is constantly changing. You know, the level of people they wanted, now people talking of AI, etc. How are staffing companies adopting to these changing needs? So, would you have any thoughts on that? Thanks.
Yeah, Ajay, thanks for the question. I think staffing companies have, they are not new to changes in IT or even for other sectors for that matter. So, uh, and the changes in IT sector have been going on for a very long period of time now. People are the pace of change, you may say, has increased because of AI coming in and all, and that needs the staffing companies to invest in recruiters. As long as uh, there is demand for IT companies, there will always be a case where they would require require subcontracting support. Now, if you look at IT companies themselves, because of all the pressures that they are seeing, they are operating at very high employee utilization levels, right? So whenever new demand comes in, they would have to depend on some outsourcing, and that then is an opportunity for staffing companies. What the staffing companies need to ensure is that they keep upgrading themselves in terms of having uh, highly skilled recruiters who are able to hire such candidates which can fulfill those positions fast enough. Uh, yeah,
So, in other words, you're saying they should adapt to the changing needs.
yeah,
There,
yeah.
there was one more slide you spoke about subcontracting as a percentage. You know, it was constantly, I think, coming down. So, is there some kind of cycle in that subcontracting that happens? There was a slide on it.
So yeah, that's. I'll just go to that slide. Uh, So typically, what happens is IT is not a linear industry. It is also cyclical, and in a cyclical industry, like if you were to look at IT companies 10 years back, they used to have this huge bench strength, and the employee
Correct.
utilization levels were sometimes in 70s, sometimes in 60% and all. And uh, those they have themselves focused on their own efficiencies, and that is where when they are increasing their employee utilization levels, the bench strength decreases, and whenever there is new requirement, they will it will take some time for them to hire and fulfill. So in the meanwhile, subcontracting comes in. So whenever, and so that is one case. Second is, it is not always necessary that the bench that you have versus what orders you are winning, both of them have the skill sets in both the cases are matching. So even in those cases, you have to be dependent on subcontract.
Right.
So whenever there is suddenly very high demand for IT, the way we saw in FY21 and FY22, uh, there would be a significant increase in subcontracting. It is like a uh, it it is double hinged to the IT demand. If as soon as the IT demand goes up, the subcontracting will increase at a multiple to the IT demand, and when the IT demand slows
Yeah.
down, the subcontracting also comes
Yeah.
down significantly. So that it is a cycle, and much steeper, as in the crest and
Yeah.
trough are much steeper than what you would have in
Others,
IT itself.
yeah. So one last thing I just wanted to ask you. Sorry for the question, but are you seeing that the staff that is being now recruited by these staffing companies, a visible change in the kind of quality, skill set, all that, or you won't know about that?
So from an external point of view, it's difficult to say, because these companies would not be giving out such data. But I would share a couple of data points which can indicate towards that. One is the average salaries at which these companies were hiring uh, 3 years or 5 years back versus
Yeah.
what the average salaries they are hiring now, and
Okay.
those are significantly higher. Like the average salaries have gone up from 4 5 lakhs to
To 10
around
lakhs.
8 lakhs and 10 lakhs. 8 lakhs for TeamLease and 10 lakhs for Quess. So
Oh,
these are
okay.
these are
Yeah.
not freshers or 1 year, 2 year experience people who might be earning this. So this would be uh, people with specific skill sets. That is one. And then secondly, since I talked about the GCC expansion that they are doing, GCCs in India
Yeah.
again now, the earlier the captive centers used to have even some very basic BPO kind of works, but now most of the GCCs are coming up with very high end work and things that they don't want to outsource to IT companies, but uh, are
Yeah.
something that is very core to their business.
Yeah.
Those things are
Correct.
now happening in GCCs. So
Yeah.
uh, that hiring then indicates that there is some change, change for the positive in the profiles.
No. Yeah. Yeah. Thanks so much for that. Thank you.
On impact of AI, what AI there's zero impact of AI in general staffing. To clarify, people will still need all the blue collar and gray collar workers as well as salespeople, everyone. In IT staffing specifically, AI is impacting the low end coding jobs and all. And as I answered in the previous question, so the lower end will go away. But as long as these companies themselves are able to upgrade and move to a level where they are able to source this niche talent and uh, provide it to the IT companies, then there might in fact be a slightly positive impact of AI on their profitability and revenues and all. Uh, is there a question after that? How
How
do you
do you see
see that
out
sector
in
playing out in India? So that is, I think, that is where I presented the this slide. So the sector, there are multiple legs to growth. One is the participating workforce itself will grow. Of that, the formalization has to happen. So the participating workforce, if you look at the working age population, it is expected to increase by some 30 odd percent. The participating workforce is expected to increase by 50%. The EPF enrollment is expected to go up by around 3 times, and flexi staffing itself also, the expectation is around 3 times over that. Now if this numbers, even if they don't play out to the extent that has been expected, there's still significant amount of growth to come in. And uh, this is an under penetrated industry in India, with all the way we are seeing retail expand in India, uh, or the organized retail, the way we are seeing all the other industries where earlier which were dominated by very small players, and that getting increased, as well as with all this government support that is coming in, this there's definitely growth expected. The next one is, will ELI scheme be a growth trigger the way PLI schemes were for other sectors? The ELI schemes, yes, definitely. It should be a growth trigger. That is the expectation that is there right now. And but the ELI schemes will be only there for next 2 years. So and in the case of manufacturing, will be the benefits will be there for 4 years. So given the that this industry doesn't enjoy any pricing power, how much of that benefit will ultimately accrue to the staffing companies is something that needs to be seen. But in terms of volume growth, it will definitely help. What kind of wealth creation have the global peers made over the longer period? I've seen data for the global peers over a past 5 year and 10 year, and they've not really created a lot of wealth except for a few companies like Recruit Holding, which so if the companies are doing more specialized business there, see, globally staffing is well penetrated. There's no population growth or there's no workforce growth that is happening there the way it is happening in India. So there's limited scope for growth for these companies, and some of these companies have gone down the path of doing acquisitions which has not played out. So there's wealth destruction that has happened there. But a few companies like uh, Recruit Holding specifically, or Conferry, which have which have focused on their core business, they've given good returns over the last 5 and 10 years respectively. Do we see any sign of industry consolidation which can improve the pricing power and margin? That's difficult to answer. I don't see any sign of industry consolidation. I mean, see, it is so easy to enter a staffing business that if you and me, if we intend to start a staffing business tomorrow and we have the capability to market it, again, coming to that relevant slide, we will be I mean, anyone would be able to set up a staffing company with just a handful of core employees and be able to manage a few hundred or a few thousand, up to 1,000 employees as well, without any requirement. So it's in a industry which is so easy to enter. It's very, I don't see what will lead to a consolidation here. I mean, people can sell their companies to someone else and they can start again. So it's very difficult to say that there will be consolidation. Those are the questions. If anyone has any further questions, please.
Hope this audio is better.
Yeah, yeah.
Yeah. Sorry, I don't know what happened. The same devices I tested on uh, were not working. If anybody has any questions, if you want to type in or maybe unmute yourself and ask. If nobody has one, I'll just conclude with one question from me. We have discussed this before, just wanted to get your perspective again. So, what is the factor that helps business stay sticky with one vendor? So, is there something that the vendor does manage in a better way? You partially covered it. If you have a nuance to it or an example you want to give, that will be interesting.
So what makes in the general staffing business, it is purely see, one is if a company wants to expand, and let's take an example of DMart or Zudio. Every time they want, they get into a new state, they don't want to engage with a new player there. They may not want to engage with a new merchant. So pan India presence and definitely helps make the business sticky. Uh, Secondly, what technology does this company bring in terms of managing that business efficiently? And sometimes third one is sometimes these companies would need some specific solutions, like the ability to uh, not just have a headcount, but some additional KPIs as well. And that is where smaller companies sort of miss out on being able to provide such specialized solution, or and that is, and those kind of businesses then become sticky. If it is purely headcount addition, and that too in a single location, then that business can might as well can move to anyone else.
Great. There's one more question that has come in. Number of workers required to maintain 1 lakh square feet mall in the modern economy and in India. Reasons if the difference is large and pricing dynamics.
I don't have an answer to that. Like what you have asked specifically gets into the domain of facilities management, uh, which we have not focused on this in this presentation. Secondly, I have myself not clearly studied that to answer it in sufficient detail. Maybe I can check and come back to the participant. Uh, and the second part is reasons if the difference is large and pricing. I think it's the same. Sure.
If there are no further questions, then we can conclude today's presentation. Thank you, Nirmal, and thank you all the participants who joined us today. We had to unfortunately cancel at the last minute because of the rains, but I really appreciate everybody joined in via Zoom. Thank you so much. Thank you, everyone.
Thank you, everyone. Thanks.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.